Welcome to this episode number 86 of Your Next Trade, called today Bitcoin $100,000. So here we are. Bitcoin finished the week above $100,000. To be perfectly honest, this is the title that I wanted for last weekend, for the last Your Next Trade episode. And Bitcoin unfortunately ended up the week a bit lower. So the risk on that the market has been experiencing since the election around the start of November, the Trump election, is still going on. This is a risk on assets where we see many risky assets. We are talking Bitcoin, we are talking the most shorted stocks, we are talking most indexes that are going up and up and up. For the most risky assets, they will be outperforming due to their beta. We are talking 2, 3, 4 times more. So very interesting. Just to give you a bit of color, that might be the last episode for the year because I might be busy in the next few weeks. There is a chance that I might do another one. If you look at 2025, we got many things that will be coming. So we are making the Discord community even better. We're gonna be going into behind the paywall. So that would be for everyone. That has been my decision to be having an opening of the Discord community through a paywall. We're gonna have as well the usual a webinar to start the year, which is for the 2025 ID generation. So that will be around the mid-January. So I'll be putting a link if you are interested. That is something that I do every year at the start of the year in January, looking at what's going to be happening in the next 12 months. So let's start about what has been the week and the week to date asset performance, looking at stocks. So we got the S&P up 1%. If you have been following last week, and we looked at every single week, we look at the weekly straddle. In other words, by how much the option market is pricing the move on the S&P. And last Friday at the close, it was plus or minus 1.1%. And guess what? We moved by 1% close from the Friday close to the other Friday close. We went on the week 1.1%. So what is it telling you? The market is very much driven by the same forces, which is passive investment. We saw tons of flows. So we have seen inflows in November, the biggest inflows ever on the equity market, US market. So what has been happening, most of the flows is new flows, but as well, we've seen outflows from Asia, from Europe going into the US because most investors are very bullish on the new US Trump administration. So due to the beta, interestingly, Nasdaq is up 3.3%. So this week, what we saw as well, we saw the big tech, the big FANG, very outperforming the market. This is something that was not very true for a month, where most of the performances were coming from other names. But this week we had really strong name. We're going to be looking at Amazon later. If you look at, so this is for the currencies. Interestingly, we are seeing some weaknesses in emerging markets. The Brazilian real. We saw as well some headlines coming from Korea. Don't get me wrong, this is not emerging market, but we saw some big moves in currencies. Picture crypto still going up, Ethereum catching up with Bitcoin, and finally gold, WTI, and copper. So looking at the week to date industry performance, if you look at the S&P that is here, you saw not as many industries outperforming the S&P, but what is interesting, we are back to the names that we had in the past, the internet, the cloud. We had consumer discretionary, so very strong week as well for consumer discretionary. Not only Tesla, but we got names like Lululemon that outperform. We got Ulta Beauty, very, very strong. So overall, consumer discretionary up more than 4%. Other end of the spectrum, oil services struggling because oil is back to the 67 level. Home builders as well. So we are back to this market driven much by very few names. On the sector performance, this is why you have the telco, consumer discretionary, and technology, as I discussed. So as you can see, telco is the big winner for the year. and very strong as well for the week to date. But overall, you can see that the market breadth over the last 5 sessions has been pretty weak. Why? Again, this is driven by very few names, and other than that, you do have like the cyclicals, like industrials, materials underperforming the market. Even financials were down on the week. Utilities, energy down roughly 4%. So what about the rates market? Looking at the US 10 years, we are at 4.15%, 4.15% for the 10 years. So since we had the nomination of Besant, the market is very much saying, we're going to have a treasury that is going to be not putting crazy supply on actually trying to have a deficit coming back from 5 to 7% of the GDP, around 3%. So this is why so far the US 10-year is at 10%. Fed funds expectation, so we get the December meeting in 10 days time. What are we pricing now? We are pricing roughly an 80 to 90% chance of a minus 2.5% cut. We had on Wednesday the Fed chairman saying that the economy is doing very, very well, much better than what he was expecting, much better than most people were expecting 12 months ago. And this strength of the US economy is giving the Fed some room to cut if needed. So he was more than pretty positive. He was very positive about the economy and the job that he has been doing. So far, very good economy, US economy. And actually, what he was saying is it's put that everyone in the world, except in the US, is jealous of how the US economy is doing. So very interesting comments on Wednesday. What about the VIX? So with lower uncertainty. So when you get low macro uncertainty, and you do have like some visibility, you get lower VIX. So you have a strong correlation between uncertainty and volatility. The higher the uncertainty, the macroeconomic uncertainty is, the higher will be the VIX. And when you have good visibility and that when market participants feel pretty good, you have VIX that is coming lower. So these days we get the VIX below the 13%. I strongly advise you, I keep on repeating myself because I'm an old man, but you should definitely be looking at the volatility in 2016 and 2017. And what you will see is actually volatility. The whole year of 2017 was really, really low. We are talking 2%, 10% roughly on the VIX. So if you think that the Trump administration will be good at having a big picture and an economy that is doing well, we might see the volatility going even lower. So what about going now into the technical analysis, starting as always with the S&P futures? So the trend is your friend. Don't go against the trend. We have a boring market in the sense that the volumes are not that big, but as you see here, the trend is higher and higher. Having said that, and this is something that I want to underline this week, we are seeing some charts that are really at the top of those trends. So we are talking the S&P. I think you do have like 1% something for the next 2 weeks as an upside. If I want to go into another chart that I find very interesting, so not that long ago, I was saying that the DAX chart was pretty bullish, and many people come to me and say, no, it's not. Over the last 10 sessions, we've seen a big move in Europe, not only the Euro stocks, but the Nasdaq, the DAX, 5 to 6% over 10 days. Now we are at the top of the range. I started trading it around this level. I want to see some positive lines and actually the market not reacting that well. But, you have the DAX, you have the S&P, you get some red flags coming in terms of technical analysis of overbought levels. So I want to go into another chart, which is something that is interesting in terms of the strength of the big fang over this week, this is Amazon. So Amazon, we get Jeff Bezos, who had a very nice interview, I think it was Wednesday and Thursday. So very interesting one about, the business and how he's seeing the Trump administration. He's more or less saying the same as most businessmen and the Trump administration has been saying recently, like Besant, which is if we manage to lower the deficit from the 5 to 7% into this 3%, but more importantly, they need to have the growth going higher from the deficit, and obviously that is the blue sky scenario. So what that does tell you is the most investors are very bullish on the US economy, thinking that actually going forward in the next 12 months, the US economy is going to be trading above 2.5-3% growth. But looking at this chart, look at those breakouts after breakouts. We are talking a gap, and then, a big move in actually decent volume. So it tells you that the flows over the last 5-10 sessions have been going into the big tech stocks. Another one that I want to flag is Adobe. So we get Adobe. Why I want to flag this one is Adobe. We get the earnings this week. Expected move, as we're going to be seeing later, is 8%. We saw a bit of a gap up and decent volume. This is the chart, a bit of dodgy chart as always, but this is the where we have been trading, where most over the last few, let's say in 2024, we have been trading most of the time between 500 and 550. So this is for the chart. And finally, I want to give you another one, which is Costco. So Costco, we get the earnings as well, making the headlines around $1,000. Some bears saying, it's way too much. So when you have the chance to have a business model like Costco, which has been around for years and years and decades, what you could do is moving your chart into a logarithmic chart. So what you don't want to have is the change in dollar terms, but in percentage terms. And so I've done the logarithmic charts here in weekly terms. And as you can see, that explains a lot as well about the trend and the different, let's say, cycle of the business. So Costco, since 2009, that has been your trend. Your trend is your friend. What you see as well, you do see some red flags about, a bit toppish. So we are talking the S&P, we are talking the DAX. There are tons of charts that are telling you, we are the top end of this chart. So very interesting to do the same with Costco. And Costco, as I said, earnings this week. So what happened for the week over the last 5 sessions? So I wanted to give you these charts, those 2 charts here and there. So this is last week, so 10 days ago, S&P, and this is the last 5 day sessions for the S&P. As you can see, they are almost twins. We are doing roughly more or less the same every single week these days. We are going up 1% with not too many hiccup in between. That tells you that 2 things. The market is driven by passive investment, so tons of flows that went into the US market. And secondly, we are as well driven by the option market, the 0 day to expiry, and those names, if you look at Palantir and all those names, they are driven the market a bit higher every single day. And you have this small move that you have. And as long as you have this market, don't go against it. If you're long, it's good. Well done to you. So that has been for the market. What about the macro? As always, looking at the PMI services. So PMI services, the headlines came down a bit from 56 something to 52, I think. But interestingly, if you do a bit of research inside those PMIs, what you will see for the services is actually more sectors have been bullish more recently. So headline not that great, underneath an okay number. NFP inline number, roughly 230,000 job creation. The market liked it on Friday. And if you look back at what the Powell has been saying is we are in the blue sky scenario. We are expecting the Fed to be cutting by 25 bips. Why? Because they think that the neutral rate, which is the rate where the Fed should not be cutting anymore, is a bit lower, or actually 100 to 150 bips lower, 1% to 1.5% lower. So that gives room for the Fed to be more accommodative. We had as well, if you're trading Europe, the French government that collapsed on Wednesday, but actually the spread between the French 10 years, the OAT versus the German 10 years came down. This is something, look at last week video, that's something that we discussed, and we had some risk on in Europe. As I said, overall Europe has been going up 5% over the last 10 days. That doesn't mean that we have some, let's say that we are going growth oriented in Europe, but we have some catalysts going forward with the German election in January, February, and then we're going to have some change as well in France in the next 6 to 9 months. What about the performance? Which stocks are doing well? This is the same story as before. So if you look on the month basis, since the election, we got Bitcoin, we knew it. We get the hard to borrow, we get the liquid more short, the high short interest, anything that is non-profitable. So overall, if you think what is outperforming the market, this is not necessarily the high quality stories, but those are the high beta. And when you are talking high beta, that means it's risk on, and it's risk on steroids. As always, it's hard to know when it's going to stop, but for the time being, this is what is happening. If you think about seasonality for the market is pretty good until probably mid-January. Finally, as we said before, we had a bit of macro or geopolitical headline on, when was it? On Tuesday, when we got the martial law that was voted, let's say, for less than 2 hours in Korea. But we had a bit of a move on that currency that we are not trading that often. For me, it's more about the stock. So there were, interestingly, some names to trade intraday. We are talking some in Europe and in our community, on Discord community, we had traders as well trading the ETF. What about the catalyst going forward? Because, we look backwards now, we're interested about what is going to be happening during these next few days. So looking at the volatility, so now expected move of less than 1%. So if you think about the S&P that is roughly trading at 6,000, that gives you a move of between 50 and 60 points expected. So a lot of volatility compression and even more than usual. So macro, we do have the CPI, we do have the PPI. More recently, as you can see, over the last two CPI releases, the market barely moved. We could expect, in reality, a 1% move, which is what the market is not expecting. We are expecting much, much lower moves. We do have lots of central banks coming into the market. We got the Bank of Canada, we got the Bank of Australia, we got Brazil, we got Swiss, and we got the ECB. So for most developed markets, we are talking some cuts, and for Brazil, we are talking a hike of 75 bips. And what about the other drivers? We got some earnings. So as I said, we got Oracle. No, I didn't say it. We got Adobe. We got Costco. We got some Toll. We got some big names. Okay, not that many names, but actually, if you think about sectors and industry, those will be interesting names. On Monday, that means we have China, PPI, CPI, and money supply. So that will be Monday morning or overnight. We do have as well some bond supply coming into the market. And finally, as I want to do as always, when I'm looking at the earnings for the next 5 days, I'm not only looking at the calendar, but I'm interested in how the stock has been doing since the last earnings. So Adobe is roughly flat since the last time, but what I'm interested is looking at what is the implied move through the weekly straddle versus the realized volatility. As you can see here, market is more or less pricing very often the same move between the implied and the realized volatility. Implied most of the time will be a bit higher because you'll be paying a bit of a premium to hedge yourself for a move. And that is true for Adobe. And as you saw a bit later, that is true as well for the S&P. So the market these days is driven by options, is driven by those flows. As long as you don't see any big changes, the trends are your friends. So We have a 25% holiday discount on the 4x4 video series. We saw actually new subscribers this week, so welcome to them. You will have access so far to the Discord channel as long as you subscribe. You're going to have access to 40 videos. You're going to have access to more than 40 spreadsheets. So this is the same as we do here, but more advanced, where you can build your infrastructure, you can generate IDs, and have like a real professional process. So this discount is going until the December the 31st. If you get any questions, as always, what you can do is you can send me an email. You can join us on the trading community. You can watch more videos. You can put a like. You can put a comment. So any questions on the 4x4 video series and or the mentoring, which is one-on-one sessions that I do with you on Zoom, where I help you build your portfolio and getting real professional process. So this is it for me for this week. As I said, that might be the last episode for the year. I will definitely try to do another one because I want to introduce as well the 2025 trade ID generation. But other than that, have a good trading week. Bye bye.